Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for October 22nd, 2009. Quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Well, the euro finally cracked 150, but stalled just under 150.50. We expect a continuation for further euro strength, but are likely to see dips as low as 149.50 to test the areas of support. Market is going to be very careful testing the waters higher, as we can all recall what happened last time. After breaking 150, the euro sharply moved to 160 within weeks before melting down in the following months into the 120 zone. The only difference today are the economics involved. There are good reasons for both scenarios. The US deficits are growing and there is no sign of improvement, and they're talking about the dollar losing another 20 to 30%. On the other hand, the Eurozone is also vulnerable due to many member countries falling below the Copenhagen criteria, which sets conditions of entry for states waiting to join. I wouldn't be surprised to see a head and shoulders pattern before a reversal lower on the euro, which I'll cover in a few minutes. The pound also stood out as a winner yesterday following the release of Bank of England minutes as traders rushed to cover their short positions. We're now looking at the euro dollar on the daily. The head and shoulders pattern I was referring to is simply this. We have the left shoulders here. We're going to have some sort of a head forming here. Now it's going to be an interesting to see if we break this 150 level or not. If we can't break the 150.50, if there's a lot of stalling that goes in between the 150.50 level and 152, for example, 152.25 to be exact, we could have a head form anywhere between the 150.50 level and 152, then dropping down to the 150 level for levels of support before dropping further lower. And that's going to give us the left shoulder here, the right shoulder in the next coming weeks. But again, we really have to see what happens here with the rise above 150. First area of resistance is now going to be yesterday's high at 150.45 or the 150.50 area. Above that, we're going to be looking for 152.25. As I mentioned over the last couple of days, we could see a lot of other areas where we can run into resistance. It's very hard to point that out. I think the ones we have to really pay attention to are the fractals: 50.50, 50.80, 51 even, 50.20, 50.50, and 51.80 up to the 152.25 area. Now, these levels are not they're not going to be strong levels. Once again, there's a lot of money involved, and it's always difficult to find these levels of resistance once we break above certain key levels like the 150. First area of support is going to be the 150 area. Now that we've broken above that, that's exactly where the market is trading at now. With that being considered, we could see dips down to as low as 149.50. That's our second level of support. We definitely expect a 150.50 level. Once we get a clear breakout, perhaps a close above 150.50, we expect the 150 level to be a very strong level of resistance. Below 149.50, we'll see 148.80. Below that is 148.50 and 148 even. So we'll definitely see once the market starts heading south, we'll see these levels as major levels. Next up is the pound dollar. Quite a nice run into the 166 level. Next level of resistance is going to be 167.28. Above that is 170.15. In the same scenario as the euro, we could see stops that could find levels of resistance at the 168 level, 160, 169, perhaps 168.50 even. 167.28 being our first level of resistance, and then the second level is 170.15. But once again, just want to make sure you understand that there could be levels in here that we could get into resistance. Unfortunately, they're tough to uncover. First level of support is going to be found at 164.50, followed by 163 and 162.50. Below that, 161.20 is going to be a very major area of support. Once again, levels of support, the first one is 164.50, 163, 162.50, 161.20, and finally 160 even. Dollar Swissy currently trading at 10058, continuing to set lower lows. We thought we had a strong bottom in place here. That's going to be an area of a resistance now for the dollar. First area of resistance is going to be 10080, followed by 101. Above that was going to be 10130. Above 10130 is 102, and 102.50 follows. First area of support is the one figure even. Now we could see some support here at yesterday's low, but that hasn't helped over the last few days. So on a break of the low, we do expect it to go down to as low as parity. Now that we're within 59 pips, we definitely think parity is going to be a very easy mark for this Swissy. Dollar yen. Actually, I want to uncover, if we break the one figure, we're going to be targeting 98.80 as the last, our second level of support. There's definitely a lot of ground here. Break of 101, 100 even. Parity level could, we could find stops, we couldn't find support anywhere in the 99.80 level, 99.50, 99.20, and then finally the 99 before going down as low as 99.83. With that being said, we're not putting these in the chart and in our graph only because there's a lot of room here. With the momentum that we've seen recently, these levels of support, once the parity level is broken, may not be significant. But it's really tough to really to play any of these levels. So we don't anticipate. We're not planning on trading anywhere below the one figure. Finally, dollar yen currently trading at 90.92. We came within a couple of pips of being stopped out on our members section. We're going to cover that in our members video. But looking at this, we may have another opportunity for a short that may help us out. Really key here is the 91.50 level. That's our first area of support. First area of resistance for the dollar. Above 91.50 is 92. And above 92, we'll see 92.50 and 93.20. First area of support is going to be 90.20, followed by 89.50, 88.80, 88.20, and 87.12 follows. So once again, area of resistance is going to be 91.50, 92, 92.50, and 93.20. Areas of support, 90.20, 89.50, 88.80, 88.20, and 87.12. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for October 22nd, 2009. Until tomorrow, good luck trading.